So here are my market insights. This is the first month of the year. How we really ended the last month of last year is an important place to really look at to understand what is really happening right now. At the end of December, we had a lot of selling around various global markets, and the sentiment was very, very skewed towards the expectation that we are going to see a recession in 2023. Now, while that expectation may not be false, but in terms of sentiment, what ended up happening is that a lot of people ended up trying to protect themselves either through selling or buying of put options, which ends up showing up in the put call ratios, which means that you had some extreme sentiment, and the markets often tend to do exactly the opposite of that. So what we've ended up seeing is a global rally in risk assets, specifically US markets, where the PCR was extremely high, including the Indian market, where also the PCR was very high, meaning a lot of puts were being traded relative to calls. Both of these markets have seen in fact, our market is still lagging, but we have seen a bounce back in US equities, and I think our market, we are seeing strength in mid caps relative to large caps. Now, we can't stay far behind from, global markets forever. They're probably, seeing some kind of pressure because of the China reopening trade, which means there was news that a lot of fund allocation is happening to Chinese equities as they continue to reopen because their equities were priced down. And therefore, Indian equities are actually, seeing some outflow from, foreign investors. So you're seeing that FII outflow in the daily numbers. However, how this is going to end is once that pressure is over, because most of it comes from active managers and they've done their shifting, then the passive investment flows that have been behind the market's advance really kick in. And when that happens, I think our markets also, join in the rest of the world moving higher. So if you actually see the pattern over the last month, you will find that initially Asian markets started to bottom out and bounce back, specifically Chinese equities, Taiwan, and so on. Later on, Korea. And once you had that, you suddenly saw European markets pick up. And so European markets picked up in the first week of this month, and they've actually rallied back. FTSE's gone back to an all-time high. The US market was still holding down till the second week, and then in the second week of January, we saw US equities also pick up and join the global rally. So the only market which is lagging somewhat behind is probably Indian equities, and we've made multiple bottoms close to 17,780 plus or minus. At the same time, we've made 3 attempts to cross the 20-day average, which has not yet happened. I think this is sort of a spiraling congestion zone that has formed for the market. People are going to wait for which side it breaks out. But if I look at overall patterns and trends around the world, we look at things like, say, the currency, which has started to strengthen, the rupee strengthening, the dollar's weakening globally, and you have a risk on rally. I think the eventual breakout for our market is going to be on the upside. The question is really, when is that going to happen? It could be sooner than later. We're getting closer and closer to one of the most awaited events of every year, which is the union budget, and market expectations related to the budget already have kicked in, and they'll continue to kick in further as we get closer and closer. And as expectations start getting, fueled into some kind of short-term speculation, I think the markets will be very much due for a rally into the budget. So that's what I think will happen over the next 10-15 days. We may be in this tight range, but we are going to break out, I think, on the upside, join the global rally as we head into the budget, and that's the expectation with which we are starting off January 2023. And the sectors that you really need to watch out for when this is happening is look at tech again. Tech has been one of the battered segments, and I think IT stocks may be due for a comeback rally. You already seen the metal space pick up in the last several months with some volatility. But looking at commodity prices, it's possible that there is still further upside to the metals rally as well. One particular place where I'm seeing weekly and daily charts show momentum build up is specifically in the oil marketing companies. Now, some of it may be related again to the coming event because a lot of PSU stocks tend to gain momentum around this event. So I'm not sure what the reasoning could be behind the pickup. The other thing I can actually see related is that oil prices, which were falling, have actually made a higher low. So initially you fell to sub $78 or so, and we actually trying to move back higher from there. And it's possible that oil prices eventually end up going back above $90 or maybe even to $100. So that's something to watch out for, which could end up being positive for some of the oil or energy stocks as well. So that's all from me on this update for you today. Thank you.